there, good afternoon. You're watching Closing Trades on ET now. I am Snehi Shah. With me is Harsh Saita. And well, an hour and a half left of trade. Let's take a look at what the markets are doing. What started to be a pretty decent day, it gave up all of those gains. We're absolutely flat right now. And in fact, we're seeing a little bit of a cut, 0.2% lower on the Nifty 50, 25,800 also seeming to be a struggle to hold on to right now. Sensex 0.2% lower. The cuts are steeper when it comes to Nifty Bank, about 0.5% lower on that end. So the banks are also under pressure. So is the case with the mid-cap index and the small-cap index as well. Both of them trading lower by about 0.5% to 0.6%. So the cuts are getting more defined as we head towards the close. Eicher Motors, Hindalco, Tata Steel, HDFC Life, SBI Life, all of these are doing pretty okay for themselves on the Nifty 50 gaining side. On the flip side, you have Interglobe, Eternal, ICICI Bank, Apollo Hospital, HDFC Bank, some of your top Nifty 50 losers. The advanced decline ratio is absolutely at the middle, and which is what has kept the India VIX under control largely. But this is what the market breadth is shaping up to be like right now. The Nifty 500 group of stocks, we're seeing a lot of action over there, although that also seems to have fizzled out quite a bit. You had some good gains on some of those stocks and they have receded. Something like a Hindustan Zinc has receded from the day's highest point, was doing very good at one point of the day, so that was looking good for something like a Hindustan Zinc. Other than that, sectorally, if you take a look at what's been happening, it's metals that are doing well. Hindustan Zinc continues to be at about 4.5%, so looking good. Pharma, media, auto, energy, realty, FMCG on the flat line, but on the flip side, IT seeing some big cuts, PSU banks and Nifty Bank. These are some of the top losing sectors. Harsh, anything standing out to you?
Well, there are a few stocks on the back of news that are doing fairly well for themselves. GPT Infra within the broader market basket, 6% higher. A Cartrade Tech, well, no real news per se, no triggers, but that too is up 3.5%. AU Small Finance Bank on the approval coming in that they are allowed to increase their FII ceiling from 49% to 74% will likely mean that the headroom available for FIIs increases substantially, which might invite better passive flows coming in. That stock is up nearly 3% in trade. A TVS Supply Chain and Anupam Rasayan on the back of that acquisition are just some of the others doing fairly well for themselves. IRB Infra on the back of the numbers that they posted also up 1.5%. Interglobe is on the receiving end of things, 3% lower on an Interglobe. A PG Electro also seeing a bit of a cool off after the kind of run up we saw in trade yesterday. And LG Electronics is down roughly 2% and so is a Biocon down nearly 1% in trade. So that's the texture. In terms of other names which are moving, may not be specifically on the back of news, but a Dixon Tech is down 5%. A Latent View down another 5 today. Mind you, that surge that we saw on Monday, we've seen a sharp receding of that in terms of the stock performance. Eris Life is down 5 as well. Tata Tele down 4.5. Persistent down 3.5. Vedant Fashions down 3. Those are just some of the other names under pressure. Metro Brands, on the other hand, is up 5%. Naveen Fluorine. Century Ply is up nearly 4%. Avanti Feed, some of the smaller names in that pack doing well. Sugar stocks, whether you call it Balrampur Chini, which is up 7. Sri Renuka is up 4. So some of those names doing well. ICICI Pru is also up nearly 3.5%. So those are just some of your movers in trade today. But Ishika here with all of the stocks on her radar. Ishika, what stocks do you have for us?
Definitely. So there have been some market movers this afternoon. One of them is Zydus Life Sciences again. It's in spotlight as it has launched Zydefa, a biosimilar drug of denosumab 120 injection used to treat various bone conditions that prevent bone from breakdown. Next up, we also have Samman Capital. It is in news today as CCI has approved the acquisition of some part of shareholding by Avenue Investment RSC. Next up, we also have Kalpatru Projects International in spotlight as it has bagged new EPC orders worth 2003 crores in India as well as overseas markets. Furthermore, we also have Dilip Buildcon. It has received an LOA for 2 MDO projects from Nalco worth 84 crores. Grow is also in spotlight as its 1-month lock-in ends today. Furthermore, Brookfield REIT is also in focus as it raises 3,500 crores from a QIP. We also have Hubtown Limited in focus, last but not the least, as it reported a robust pre-sales of around 3,547 crores and plans a strategic merger of its ultra luxury projects of Bandra, Prabhadevi and Mahalakshmi into the listed entity. Back to you.
Okay, thank you so much for that, Ishika. Kunal Bothra also joining us at this point. Kunal, how are you viewing markets?
It's a different lens altogether.
Directionless, right?
Completely. So directionless, completely volatile, I would say, because yesterday was a different day altogether. Today is a completely different day. Yesterday the market breadth was extremely negative. Today we started off the market breadth on the positive note with an expectation that maybe the indices could probably hold on with this positive market breadth. But I think now, if I'm not wrong, we are now in the favor of declines more in terms of advances. So that generally indicates that the selling has been more broad-based. I think majority of the selling, and I was looking at the index contribution on the Nifty and the Bank Nifty. So I think the Nifty contributors, ICICI Bank and HDFC Bank, they are contributing almost 60-65 points on the downside for the index. That substantiates the 70-75 points cut for the Nifty, and almost 300 points within the Bank Nifty is contributed just by the selling which you've seen for HDFC Bank and ICICI Bank. So today it's more large cap oriented selling. You're not seeing a very deteriorating market breadth. Yes, we've not been managed to hold on to those higher levels, but that's the nature of the markets which you've been trading over the last few days.
Okay, so that's the market breadth and the market structure right now, Kunal. But 25,800 also is something that we've breached, and that also looks difficult to scale. In fact, 25,750 thereabouts is where we are at right now. What would now be a support level to watch out for the Nifty? That below that, if the Nifty breaches, it's actually a big point of concern.
See, I think 25,750 frankly is a good support to look out for, and that is where the index yesterday also managed to bounce back from. So we're expecting that 25,750, even if it's a double retest towards the previous swing low, that support would hold on. But then what matters over here is that you are heading into the event of a Fed policy, and when the market goes into this kind of a event, at the point when the supports are just about on the verge of being broken, then there is a lot of skepticism. You can say alertness in terms of traders who would want to just about hedge their positions or maybe try and cut down the leverage as such. So I think we are now at a very critical juncture. 25,750 is a crucial support for the Nifty on the spot levels. It's also coinciding with a major gap. So on 11th and 12th of November, the Nifty showed a gap of almost 75 to 80 odd points. That gap support also lands closer to this 25,750 mark. So it's a very crucial support. But then my only sense is that with the event lined up, it's going to be very difficult to preempt that whether the index will hold on to this gap support or not.
Your picks for this afternoon, Kunal?
So one buy and one sell, like what I mentioned in the morning also in terms of the theme of the market texture. So would go with the sell on Tata Elxsi, a stock which is clearly being into a downward trend, showing signs of further weakness over the last couple of days also. The stock has shown some aggravated selling. So would look out for 4,800 as a target, stop loss at 4,950. And on the buy side, would look out for SRF. It's a potential candidate of a fresh swing breakout on the daily charts. So would look out for 3,020 as a target, stop us at 2,880.
Okay, so those are the calls coming in from Kunal this afternoon. But on that note, we'll step into a very short break. Be right back with more news, stock-specific news and updates.
Welcome back, and you're watching Closing Trades here on ET. Now, let's quickly go across. We had Keynes Tech today on the channel. We spoke with the management, and it was recently under pressure, the stock, over concerns over their accounting disclosures. And in conversation with us, the CFO and whole-time director, Jairam Sampath, reiterated that the disclosures were not missed by the company. He also spoke about their order book. Listen in to a slice of that conversation.
The disclosures were not missed. It was notes to account that was missed. I think that's the correct perspective. And of course, people did build a lot of other biases they already carry in their minds about this business and the governance and this and that. Fundamentally, this was a notes to account that was not printed. Maybe the previous version had come in. So simple solution for this is to put a proper software tool to ensure that we don't miss out on the printing of these in the notes to accounts. These contingent liabilities are indicative of growth when they are employed. They are employed to get, let's say, some ability to borrow for working capital in the subsidiary. Look at us is not a quarterly business. We do hold orders worth about 8,000 plus crores as of September, and bulk of it is non-meter and these kinds of project related.
Okay, that's the word coming in from the management of Kaynes Technologies. But while we're talking about the company has been on our radar for some time, and here's a bull versus bear case that Shrishti is joining us to break for us and give us the analysis on both sides of the coin. Shrishti.
Well, yes, absolutely. Kaynes Technologies, a classic battleground stock right now, with the street sharply divided between the bulls and the bears. So firstly, let's tell you the concerns that were flagged off with respect to the bear strategy. Because of that, we are seeing such a sharp fall in Kaynes Tech of late. But we'll also tell you the kind of clarification that we have got from the management. Let's break it down point by point. Firstly, with respect to the smart meter contribution, this is one of the new segments for Kaynes Tech, have been contributing significantly. The margin profile is quite higher, and over there we have seen some working capital concerns, because working capital on an overall basis did shot up to 116 days in the first half, significantly higher than the overall working capital of FY25, and that's because of the higher smart meter contribution. But the management clarified that the mix out will drop sharply in the second half, which should naturally bring the working capital and the receivable is lower in the second half. But how will that be? How will the management do that? Because the other concern that was flagged off in the H1 financials was the receivables and the customer profile, wherein it was highlighted that the receivables have actually doubled, and that has strained the cash flows in the first half of this fiscal. But the management did say that with respect to the smart meter segment, they will not be servicing the customers, and they will definitely be providing the smart meters, but service as a whole is not something that they will be focusing going ahead. One of their key clients is actually a government client, which is PGCIL, and Kaynes is exiting the AMISP model, that is the service model, meaning this long cycle pattern won't repeat. Now, the other concern was the contingent liabilities. Now, there's a worry that the contingent liabilities did jump to almost 210 crores in terms of the guarantees. But on that, the management did say that this spike is largely tied to the legacy Iskarmiko projects and isn't expected to materially rise from here on. And that's what some of the brokerages are also believing. Then comes the R&D expense. Now, there's the concern that it's on the higher side, which is of a high level of capitalization. But on that, the management argued that the large ODM programs like Kavach will start delivering the revenues, and expenses will normalize going ahead as these projects scale up. Now, when it comes to Kaynes Tech as whole, the company, smart meters is not the only segment. The company is present in some of the other segments as well. Yes, smart meter growth will be on the slower side. The contribution will come lower. But some of these brokerages do believe that going ahead, the autos, EVs, industrials, and the railway segment, they are already picking up, setting up a strong second half rebound is what the brokerages are believing. Now comes the verdict. The brokerage and the street is indeed divided. It comes to Kotak, because Kotak was the one to flag off all these concerns from their annual report. For today, they have come out with a note, maintain their reduced rating, and once again slash their target price to 4,150 rupees. While JP Morgan on the other side, after all the clarification that has come in, they did not change their stance, and so is the target price. They still remain overweight on Kaynes Tech with a target price of 7,550 rupees. So that's a bear versus bull scenario. So overall, it's a classic split screen. Back to you.
Thank you so much for that, Srishti. With regard to Kaynes Tech, and joining us at this point is Deepan Mehta as well, Director Elixir Equities. Deepan, what do you make of the entire Kaynes saga? Opportunity to buy, you reckon?
Yeah, good afternoon. Thank you for having me on your show. I'm watching it very closely. I think it'll come to a sweet spot where you could certainly take the chance, because end of the day, it's a growth company in an industry which also the dynamics are internally very good, aggressive management, a lot of expansion plans going on stream. I would say that they may have messed up a little bit on their inorganic strategy, but that also that certainly is definitely something they could look at. So let's just wait and watch. I think at some point of time it'll come to an attractive level. I've seen how these things play out, not in the same industry, but if you remember, whenever a pharma stock gets completely,
Him on a patchy line. We'll try and reconnect Deepan over there. Kunal, a chart check on Canes. We've spoke about this stock ever since the issue has started for it. But has your view changed at all given the fall has been so sharp? Now does it make for a good case to buy, or is it looking attractive at all?
See, price-wise at 3,900 odd levels, the last 2 or 3 days, it indicates that there's been some sort of buying which has happened for the stock price, some support which has emerged for the stock after this very sharp selling. But then the only question over here is that this level of 3,900 thereabouts for Keynes Tech coincides with the correction the stock had seen in the first half of 2025, where the stock had corrected to those kind of levels and then bounced back to 7,000, 7,500 mark. The worry for the stock is that if it breaks below this support level, then I think you're looking at the stock going into a steep underperformance, which could last for maybe many months to come by. So that's the concern for Keynes. In this kind of a scenario, it is always better to try and just about wait out for some more time, to try and observe what the stock is going to do over the next, say, couple of weeks, over the next couple of months, whether you see the stock holding on to those levels, because there's going to be a lot of fight in terms of bulls versus bears into the stock price at current levels. So we need to see which is the most stronger hand going forward, and that's what I think one should probably try and take advantage of.
Very interesting. Do we have Deepan with us? Okay. So we'll wait for Deepan to come back. But while we're at it, blockbuster debut. Meesho listed at a 45% premium after IPO. Subscribed. The IPO was subscribed nearly 80 times, and massive QIB demand that it saw. Equus also opened with a strong 13% listing gain. Again, the subscription numbers were just out of whack, 100 times. And Vidya Wires, it listed largely flat, and this is despite a 27 times subscription number. We caught up with all three managements, listening to pieces of that conversation, and we'll go in and also speak to management.
Reaching scale much faster is very important. Today, a lot of consumers who join us, they join us because we have the largest base of these sellers across the board, and vice versa. A lot of sellers join us because we have the largest base of annual transacting users. Which other platform will offer you 23 crore customers to serve? So that's the beauty about platforms. Once you get to critical mass, as they say, you have increasing returns to scale, that you can keep growing much faster, and which is the approach that we have taken. And which is why, if you see, even Dhiresh was mentioning, even now, even at this base, we've been continuously investing. Instead of maximizing profitability, we have been maximizing, hey, can we go out and acquire more users much quickly if we have great returns or payback on that investment amount.
Our order book really is reflective of what my end customer order book is, Airbus or Boeing. Their order book is 10 years. Our contracts are 5 to 7 years, which pretty much matches to those programs. And so we have a very good visibility of our order book, and our growth is also corresponding to the natural growth of these programs which are happening, which are announced already. Just to give an example, Airbus A350, 320 is going from 52 aircraft per month to 75 aircraft per month by 2029, and we are pretty much will have that increase coming to us, that growth rate. And on top of that, we are also winning new contracts.
Next financial year, 60 to 65% utilization will come. Even in this quarter, we will get some impetus from this current unit also. So the revenue will accordingly, our capacity utilization, optimized utilization of our capacity, the revenue will also grow.
We already have 12 products in our portfolio. Another 6 products we are adding in the new facilities. These new facility products targeted are the sunrise industries, including this renewables, EV, AI. So all these industries are actually speaking, rising industry. They will give good margins, and we shall be able to improve it in our coming time.
good track record. So it may become it may come into a sweet spot where it will make sense for investors to buy for the long term. And also, there are very few EMS companies per se, and they're all extremely richly valued. And this is one of the bigger players also over there. So, from that point of view, also, I think investors like us who are underweight the EMS space could look at such companies more favorably than others who already well invest.
Deepan, hi, good afternoon. This might not be an apple-to-apple comparison, but given the way we've seen Canes reach a high and come down, do you have a similar approach for something like a Trent? Because similar story, it's reached peak levels and then fallen from there. Do you believe now is a good time to relook at Trent?
I think that as investors of Trend as a measure of disclosure, we are remaining invested,
Okay.
but we should anticipate slower growth and lower returns as well. So I think that the kind of comparison is not the same because the growth rates in Canes is certainly much higher than that of Trend. And from these levels, I think Trend will only just about grow at the kind of growth rates which we have seen in the past 2-3 quarters or so. It'll be difficult for Trend to raise its growth rates. And I think the P multiples may sustain. So the returns you may get from Trend from these levels will be in line with the growth in the earnings of the company. So like Trent is there, like Titan is there, also similar kind of businesses where high growth phase has now got over, but still they can grow at the mid-teens level, which is very rare considering most of the large cap stocks. Valuation multiple, I don't think will compress even from these levels because of scarcity of good quality ideas within the space they're operating in. So one should expect returns in line with growth rates. But Keynes is a different story altogether, where once the dust settles, you can again see the P multiple also expand and the growth is significantly higher.
Okay. What do you make of an Indigo, Dipan?
I think it's in a similar position like Keynes.
Okay.
Again, disclosure that we and our clients are invested in Indigo. And we do feel the pain of the correction in the stock and also the kind of pain which their customers have gone through. But look, I think they'll be able to maintain their 60% plus market share. The company is growing very aggressively in the international market. I don't think that expansion plans have been impacted by any order, and those routes are far more profitable as well. So I think once the event goes out of the news, and Indigo will make certain corrections and take certain strategies in place, I think they'll go back to their original kind of volumes, and that would mean a re-rating of the stock as well. But buying into an airline company is not for the weak-hearted. I expect the December quarter to be quite terrible because of this event and rupee depreciation. But end of the day, in the travel and tourism space, this is by far the best stock to pick, and valuations are now really at very attractive levels. This company can kind of generate 10,000 crores of net profit, in our opinion. When it does, maybe I can't say immediately. And in our opinion, it's very attractive, valued at about 6, 17, 18 times that 10,000 crores profit potential which the company has had. So by the way, in FY24, its net profit was 8,000 crores, and thereafter the
Snap that connection again, but Deepan was talking about how the valuations now look attractive for Interglobe Aviation and how it is the most well-placed stock in the entire travel and tourism theme. But while we're talking about Indigo, let's bring you the latest, because now the DGCA has directed Indigo CEO to attend a meeting and submit a complete report and action plan by tomorrow, that is 11 December. The regulator has also mandated Indigo present information on key areas to ensure passenger welfare and operational stability. My colleague Samir is joining us with more details. Samir.
DGCA has issued a summons to Indigo CEO and airline top management officials to appear before the aviation regulator on December 11th at 3 p.m. Indigo Airline has to submit a comprehensive data and a detailed action plan regarding the massive flight disruption. As per the order issued by DGCA, airline CEO has to present that what was the reason behind the massive flight disruption, the action taken by the airline to resume to normalcy, and also they have to apprise advice related to the current strength of pilot and cabin crew, and also how airline is going forward to induct more pilot and cabin crew so that the entire flight operations get stabilized. Now, let me tell you that this is not for the first time. Basically, Indigo management has got a one-day extension. Prior to this, they were called upon on December 10th, but now they have got one-day extension. Earlier to this, DGCA has already issued order to the airline to curtail the flight operation by 10%, which means that they have to reduce the flight operation on high demand route, specifically like Delhi, Mumbai, Delhi, Chennai, Delhi, Kolkata. So 10% flight reduction has already been ordered. But it is very likely that we might see some more strict action taken by the regulator or by the ministry against the airline. Important update from the airline side is that they have announced that 100% network coverage they have achieved. Indigo touches to 138 destinations. This all has been covered, and also Indigo CEO says that that they are going to operate roughly around 1900 flights, and the flight operation has reached to a stabilization point as well.
In the entire process, let me make one point very, very clear, that we are not leaving Indigo at all.
What's the action you're going to take?
Very accountable.
I haven't seen, people haven't seen any action so far. What are you going to do?
We from the ministry have advised the regulator to cut down 10% of the operations.
That's not punishment enough.
10% of the operations in the prime routes. There are multiple things. This will act as a deterrent for them, also to encourage the competition and also to ensure the stability on operations. Second thing, we have also issued a show cause notice. We are thoroughly going into detail of the reply that has been given. Show cause notice to CEO of Indigo, CEO of Indigo. This has never been done. It has been done for the first time considering the incident. Third, we have also had a detailed inquiry which has been started. We have given them a stipulated time to work it out because we wanted to know exactly where all they have done the mistake, and not only how we have approached to this situation. Why was it that those 2 days, third, fourth, where it peaked, why was it that third and fourth, they were not even able to manage this situation?
Okay. So that's, of course, the exclusive interview with the aviation minister. But let's go across. We have Nagaraj Shetty also joining us, senior technical analyst from HDFC Securities. Deepan, before I come back to you, let's quickly take a technical view and I'll come back to you on a fundamental on Interglobe. Nagaraj, what's your view with regard to an Interglobe at this point?
Hi, good afternoon. Indigo has taken a hit, no doubt. Technically, it has broken below the important support. That event has caused significant damage to the price trend that has risen over the last few months. The overall chart pattern is looking negative, technically speaking, and more weakness is likely. And 4600 is going to be the next support for this stock price in the near term.
You are making a point with regard to profitability. 8,000 crore of profit in FY24. FY25, we've seen a dip on that. And thereafter, you're expecting 10,000 crore by when?
No. What I meant was that the company made 8,000 crores of profit in FY24.
Right.
And thereafter, they have added significant capacity. I think every year they keep adding 15 to 18% type of available seat kilometer means capacity. They're expanding in the global market as well. So I estimate that under blue sky scenario, this company can generate 10-11,000 crores worth of net profit. And at current valuation, I think 1,80,000 crores would be the valuation thereabout, market cap. It's at 17-18 times its, what I estimate to be its profit potential. When it happens, I don't know, it could happen next year, could happen the year after that. At some point of time, once the dust settles and they have additional capacity in play and more pilots to fly, and the overall ratio of international flights goes from 30% to 40%, this company can generate 10-11,000 crores worth of profits under stable rupee rate as well. Many assumptions are there, I agree. That's the potential of the company. And looking at the potential of the company, I think it is undervalued at this point of time. But as I said again, we remain investors in Interglobe Aviation. So our views could be biased and investors need to do their own due diligence.
So that's the take coming in from Deepan on Interglobe Aviation. Kunal, give us a chart check on some of these small cap counters that are up in away today. Something like a Welspun Living, Naveen Fluorine up between 5.5% and 6.5%, both of these names. How are they shaping up on the charts? Because volumes are looking strong today.
Yeah, I think there are many stocks which are now starting to see some good volume pickup, and I think you can probably try and add up the prices. So it indicates that it's more buying related activity which is happening to the stock prices. For Welspun Living, the stock is bouncing back from its previous supports around the 130 mark. 130 has been a support for the entire month of November, where the stock had gone through a first leg of a correction. But then on the higher side, I think the stocks also has a resistance, a cluster of resistance rather, at 145 to 150 range. So my sense is potentially another 5%, 4% higher from current levels is where the stock would face the first sort of a major resistance point. For Navin Fluorine, on the other hand, the stock is coming out of a mild corrective phase. It has done reasonably well for itself in the last 3-4 months, moving up from 4,500 to initially 6,000 plus mark, and then recent correction has brought the stock back towards 5,500 mark. So I think it's now coming back on course towards potentially retesting the previous highs and crossing about those levels.
Okay, so that's the take coming in on two of the small cap gainers today, Welspun Living and Navin Fluorine up and away into today's trade. That's the chart check coming over there. But on that note, we are going to slip into a very short break and keep the discussion going with our experts, both on the fundamentals and technicals on the other side.
I've seen a whole host of metal companies trading at much lower P multiple than they are trading just now, and also the profitability also has been pretty decent. So in a way, if you are getting into these companies just now, you are in a way trying to buy into one of the highs, and the best way to pay cyclical stocks is to buy them when they are at their lows and when the industry is in a bit of a stress zone, which is not the case just now. So sum and substance being that if I was an investor, I would remain invested but wait for a correction when it comes to making a fresh investment in metal stocks.
Take on metal, and while we're talking about metal, very interesting to note that spot silver is above $60 for the first time, and a big beneficiary of this today is Hindustan Zinc, because remember, it derives about 30 to 40% of its revenue from the silver segment. Nagraj, a chart check on Hindustan Zinc, given the kind of run up that we've seen today, up about 4.5%. What's your take on the charts?
Yeah, Hindustan Zinc chartically looking positive after a downward correction of few sessions. It has witnessed a decisive breakout so far today, looking like it is likely to move above the important hurdle of around 520, 518 to 520 levels in the near term. Overall chart pattern is shaping up towards the further upside, and 538 to 540 is going to be the next hurdles to be watched in the near term.
Okay. Metro Brands now up 11%, Kunal. Strong volumes that we're seeing on this one. 4 times 20-day average, but this 11% move, very sharp.
Yeah, it's a sharp move. It's brought the stock back again above its 200-day moving average. But then I would believe that the stock over the last 2-3 months was just about going through a phase of a major consolidation. So even in the month of I think March, April somewhere, the stock had formed a low which is around the 1070-75 mark. The recent low the stock had made, I think last week or so, was around the 1075 mark. And on the higher side, in the last 6-8 months, the stock has been making resistance or taking resistance at the 1300 levels. So broadly it's into this 20% band, 1075 on the downside, 1275, 1300 on the upside. So it's just that with today's volume push, the stock looks to be, I think, going on course of trying to retest yet again the higher level of this range. Potentially 1275 to 1300 could be a zone where the stock may face the first level of a major resistance.
Deepan, some of the small finance banks, smaller lenders, would those be on your radar? Something like an EU Small with the announcement that came through with regard to FII headroom increased, which could lead to passive flows. That stock is perked up. Do you like any of the stocks within that basket at all at this juncture?
No, I think that one should remain pretty equal weight as far as the sector is concerned. I would prefer to play the lenders to the NBFCs. Favorite stocks with usual disclosure that we are invested would be Bajaj Finance, Cholamandalam, and gold loan company called Muthoot. very positive on NBFCs, especially these three NBFCs, which are in a way diversified or have an excellent track record. Banks per se, I'm not, I mean, I think that they're in for a cyclical upswing, but long-term prospects of banks, I'm not so certain. It's becoming more and more of a red ocean. And I don't think that these kind of net interest margins are sustainable over a longer period of time. They'll keep feeling the pressure, and volumes also will keep on eating away because of competition and threats from the sort of other new players also coming in. So I would be a bit circumspect on the banks, although I'm not, selling or not advocating exiting the banks per se, but very cagey to increase exposure over there. And certainly on the lending side, our preference is for the NBFCs, especially large NBFCs, which have a diversified lending portfolio. So the concentration risk is less.
Nagaraj, do you have a tilt with regard to what you like within the NBFC basket and your view on Muthoot?
Yes, NBFC basket, if you look at the chartically, has taken a sharp beat, recent downward correction, and I'm expecting NBFC even sector more prominent stocks are placed at the important support level. I think once the market shows some resilience at the lower level, shows some base at the lower level, I think NBFC is the one who could lead the market towards the upper side. And as far as Muthoot Finance is concerned, has been in a longer uptrend, currently showing consolidation moment within a band of around 3,800 to 3,650, 3,700 levels, within a band only. We have seen some consolidation moment, tight narrow range. Overall trend remains positive for the Muthoot Finance, and if it breaks above 3,800 levels, where one can expect this to move towards the next hurdle of around 4,000 levels in the next 1 month.
That's a view on some of the NBFCs and Muthoot Finance in particular. But on that note, Deepan, we'll let you go. Kunal and Nagaraj, stay on with us. We'll welcome Anand Tandon on the other side of this very short break. Of staring at clouds. It's a support, but it's not proving to be a good one.
See, it's a support, I'll say, Sneh, because yesterday also the Nifty made a low of 728. And from there we bounced off to 25,900 mark. So it was a 200-point comeback for the index yesterday. Today also I think we made 734, 735 thereabouts for the Nifty on the spot levels, and we are back to 775. So it's not about 750 as an ideal benchmark or the line in the sand kind of number. It's the change of characteristic which happens at 750 levels. Because there traders would want to just about try to cut down your short positions, maybe try and initiate few longs. You look at the stock specific action, the volumes are being seen on the higher side on small caps and mid caps. That tells you that maybe the market tilt is going now in favor of being a lot more stock specific. The worry or the concern for the markets is the event and the reaction which could happen post the event today. That I believe could be a bigger concern, because if in case the market opens with some kind of a gap down, then you are now looking at a complete change of scenario, and that 25,750 mark, which has been acting as a support for the last couple of days or maybe over the last 1 month, that would change its characteristic and behavior and act as a major resistance. So all depends now on what the market and how the markets react post event tonight.
Okay, and with that, let's bring on board Anand Tandon as well. He is independent analyst to give us a fundamental view. Anand, what are you doing at this point in markets?
Not a whole lot. I think the direction in the market is still unclear. And, the sideways move has lasted quite a bit. I think there are still major macro concerns globally which will affect the market, in particular, the trajectory of interest rates in countries like Japan. I think there is a possibility that you may see a rewinding of the carry trade across most of the countries. And given the fact that the Indian rupee has weakened significantly, that doesn't help, because for an investor looking from outside, you've actually made no money in India so far. And if costs of capital go up in other markets, you will likely want to get out even further. With that overhang and the kind of flows that you continue to get from IPOs, I think there is no particular thrust upwards that seems possible. Earnings have been middling, while the last quarter was decent. I don't think that the forecast looks It's more hope than strategy at this stage. And therefore, while the market is within a kind of range of valuation which is somewhat acceptable, it is still on the higher side. So I don't see any major trigger, barring perhaps things like the US trade deal, etc., which frankly I don't feel will happen anytime soon.
Okay, so all eyes are going to be on when we get more updates about that deal with the US. But Anand, if at all in a market like this, one must go hunting for a safety net, do you believe the large caps are better placed in terms of a risk reward ratio compared to the broader market right now?
Well, absolutely, without doubt. I think the major themes continue to favor the large caps. Even today, if you look at it, you are looking at things like metals, things like energy, AI as a major growth themes globally. And I don't think that's very different from what you're going to get from India. And all of them, it is the large cap companies which are better positioned, both in terms of being able to execute on projects as well as to raise money. In the Indian context, if you were to look at government-driven projects as well, there again the large caps benefit. And while there is a lot of hope on the basis that the domestic, the consumer discretionary will pick up, I think that is more or less reflected in the price. So there isn't a whole lot that you can look at outside the market in terms of the broad market. Even the companies that are coming up today for investments or as IPOs are all fairly large companies. They are not undiscovered stocks in the sense, even if they are not making money, they have large market shares and they are kind of market leaders in the space that they operate in. All in all, I think you can always find in the whole universe, you can find 10, 20 stocks from the small cap. But to do it consistently and to treat it as a strategy, I think there is no great justification.
Okay, Nagaraj, BSE, that stock is reeling under pressure. Now, I know typically this is a slightly volatile counter, but the kind of move today, what does it signal in your opinion? Okay, all right. We'll patch that line with Nagaraj. Kunal, do you have a view with regard to a BSE?
Yeah, I think maybe some sort of a profit booking which could be happening into the stock price on the short-term basis. But then what the stock has shown today is a clear amount of weakness on the short-term timescale because it's managed to now break below its 50-day moving average. That I believe could be a point of concern for BSE. So assuming if the stock closes at the current levels sub the 2600 mark on the spot basis, my expectation is that the near-term prospects for BSE would look a little bit more on the weaker side. And then you can try and add this up with the likes of MCX, etc., which are also going through a sharper correction. So I think it's the entire capital market kind of a theme which is going through a corrective phase, and that I believe could be maybe on the back of some unwinding pressure which could be happening.
That's on capital markets. But Anand, once again coming back to you, remember last week or a couple of weeks ago when the rupee started going into a sort of a free fall, we did see the IT pack seeing some very healthy gains. The rupee has not recovered all that much, but you are seeing IT under a lot of pressure lately. You have Persistent that's lower by about 4.5%, Coforge, OFS's, Infosys. So largely the mid-cap end of the IT basket is not doing all that well. Your view on IT at the moment and how it's placed?
Look at the earnings potential. I think the companies like Coforge, etc., have been consistently guiding for fairly strong and robust earnings growth. And if you were to believe what they say, one could argue that that is still the space that you have to be. But if you were to step back and look at the broad themes, as I said, I think of Indian IT very clearly as a counterplay against the AI boom. So if you have to assume that AI works, Indian IT doesn't, and vice versa. That's no doubt a very simplified way of looking at it, but it helps to think simply in many cases. So, if you seriously think that the US, that the global IT market will move towards AI and continue to move towards that, not only in terms of investments, but also in terms of outcomes that what those investments are yielding, then Indian IT will be under threat. I mean, look at the announcement we heard from Microsoft today that they will train, something like 2 crore people in India on AI. Well, the total market of AI IT professionals in this country is of the order of 50 lakhs. So either you are saying that you will train everybody else other than the IT professionals in AI, in which case what will the IT professionals do? And you have to do that. You have to do 4 times that size to reach that kind of number, or you have to believe that the number is hot air. Take your pick. I mean, I don't have a way to answer which one is more likely. But anyway, those numbers are pie in the sky, likely to happen over the next 10, 15, 20 years, not something that will happen anytime in the next 3 or 4 years. Will people be able to use IT? I believe the use cases are becoming stronger and stronger, not weaker. And at least at the lower end of the curve, for many of the services industry for which India is well known, you will be able to replace people with IT. All of that is not particularly good news. IT companies' margins may improve as more they may be able to deploy people at a higher rate for those who remain, but the total numbers will not be increasing anywhere close to what they were. And given that our model was people into dollars per hour, that's not a very sustainable model.
Well, very interesting. Okay, and while we talk IT, opportune time to bring in what the Fed will also likely do tomorrow, and the December rate cut. The hopes at least have strengthened after firmer consumer spending data, but more importantly, it's just the CME which is expecting an 89% chance of a 25 bips rate cut now. Analysts expect multiple descents though, as tariff-driven inflation collide with signs of cooling labor markets. The Fed watch tool points to a cut of around 25 bips, of course, as I mentioned. But Powell has warned nothing is guaranteed, though. Ashesha here with what to expect.
Yes, Harsh, largely the expectation is that Federal Reserve will cut interest rates by about 25 basis points in the meeting outcome, which is expected later tonight. Now, remember, more than the 25 basis point rate cut, commentary that comes in from Federal Reserve Chairperson Jerome Powell with respect to interest rate trajectory going forward, with respect to labor market growth and inflation outlook for calendar year 2026 will be very crucial. So any kind of commentary that comes in for any of these aspects will be keenly watched by not only global equity markets but also commodity markets, especially for gold and silver, which have rallied quite a bit over the last few months in expectation on expectation of 25 basis point rate cut. Let me also take you through what Federal Reserve commented in their meeting last time, which was in the end of October. One, of course, they cut interest rates by 25 basis points, but they had given some important commentary where they said that job gains have slowed, economic activity is expanding at a moderate pace. They also said that unemployment had edged higher and inflation has risen and continues to remain elevated. So any kind of commentary around inflation, around growth, around labor market, which seems to be cooling, will be keenly awaited. But largely, the expectation is of a 25 basis point rate cut.
That it is. Thank you so much for that, Ashesha. Kunal, would you play IT in any fashion, given the possible opportunity if IT were to see a rally tomorrow, if at all? And what do you make of persistence move today, 4% lower?
Yeah, I think IT could be a good contraplay from current levels because it seems like that the IT stocks or the index has gone through a 3% correction, if I'm not wrong, the last 3 days, from 39,000 thereabouts to 37,700. So I think it's a decent correction for the IT index as such. It's come back towards its 20-day moving average. Names like Persistent have also gone through a correction, which have been the stronger set from the mid-cap IT names. My belief is that maybe I think this could be a good contraplay. So if I have to take purely a speculative bet, then I think yes, names like Infosys, maybe a Tech Mahindra at current levels, a Coforge, I think these could be good contra bets.
And Kunal, view on Paytm, sharp fall on that one also today?
Yeah, I think, again, this is more or less in the stance of how the markets have been behaving, where many of the stronger stocks, I was mentioning the likes of BSE, for example, MCX, Asian Paints, Paytm, etc. So it's some sort of an unwinding of positions or profit booking which is happening into these kind of spaces. You have to wait out for a point where the stocks land up towards a key support territory. For Paytm, that support is around the 1225 mark over the very short term, which coincides with the previous support where the stock had taken a bounce back towards. So that could be a good point where traders could look at a contra buy.
Okay, and now my colleague Ankur caught up with Shripal Shah, the Managing Director and CEO of Kotak Securities, on the note they have released with regard to their India outlook for 2026. Listening to a slice of that conversation.
India is one of the fastest growing major economies, and the last print, which is at 8.2% for Q2, is testimony of that. In terms of investment, currently what we look at it is currently there is a value and there is a space in the large cap and particularly Nifty 50. We have come out with the outlook, particularly basing our 2026 outlook as base case scenario of 26,120, and primarily that is on the back of the earning growth expected on the back of lot of initiatives and steps taken by central bank and the government.
Right. Now, let's shift focus to which are these revenues. Gold, we have seen, has been star performer in 2025, similar for silver as well. But in 2026, do you predict the same trend will continue? Do you think the yellow metal will outpace everyone, or you think the equity has a chance?
Yes, you are right. Gold and silver has surprised most of us in terms of trend. Yes, it was bullish, but the kind of growth one has seen in gold, which is around 60% year to date today, and silver is almost double. The trajectory continues to be bullish, not necessarily the growth returns. You may not expect those kind of astounding returns every year, but yes, gold and silver is becoming now a currency play also. You are taking investment in gold and silver not only to look at it as a commodity, but I think it is also being taken as a dollarization or de-dollarization trend. A lot of central banks are diversifying into this. Silver is becoming, gold plus, metal play, where industrial metal also comes into play. Industrial demand also comes into play. So our advice to the investor is stay invested in this bullion space. Levels can change over a period of time. There might be temporary downturn also. But long term, this is the place where you need to diversify your portfolio into.
One last question before I let you go. Let's also talk about the risk, and there are many currently. One is, of course, India-US trade deal. You talk about rupee weakening. And globally, the yen carry trade is something which everybody is watching out for, especially when the yields have inched up. And how do you see that? Which of the risk one should be aware of? And more importantly, how should one hedge against it?
Yeah, so first, what are the risks today? You are right, currently the currency which is depreciating is a little concern. But in my view, that is also, you can look at both way. The depreciating currency may augur well for the purpose of export boost, and technically in the era there is no trade deal, this can support us. Second is, of course, there is some way on the current account deficit because of the currency, and that is where we need to watch out. What we have seen is that our export to US has gone down by 12% in September month, but export to other countries have gone up by 11%. So, of course, there will be a way in terms of how will you deal with the trade deal. But yes, trade deal is very important for India. It has taken a long, and I think we need to especially watch out for that risk. As far as hedging that risk goes, we already discussed in the previous question, is that gold and silver is becoming a beautiful hedge on the entire financial asset, and that should continue to hedge you through the some of the disturbance time.
Okay, so that's the conversation that my colleague Ankur had with Shripal Shah for Kotak's outlook for 2026. So looking good, they've released their Nifty base case, bull and bear case as well. So that was the chat over there. The bull case Nifty at 32,032. Kunal, this level looking achievable?
On the Nifty?
32.
Very much possible. In fact, I made this observation a couple of weeks back that the Nifty has a tendency of breaking new highs in the end of the quarter of September or December. And whenever that happens in the subsequent next 4 quarters, and this has been over the last 25 years, there were 6 observations which we pointed out, that the moment the index makes a new high or breaks the previous high after a gap of 4 quarters at least, which in this case it was almost 14 months, in the subsequent 4 quarters, the average return for the Nifty is 30%. Minimum is 15, higher side is 50%, and the average is 30%. 6 readings in the last 20-25 years for the Nifty. So a bear case, not a bear case, but I think a minimum case scenario is we are looking at 15% returns from those 26,700 or 200 levels, which is the high. That takes to 30,100, and the higher side, which is 50%, takes the index to almost 34,000 plus mark.
Wow! In the next 4
quarters. 4 quarters.
4 quarters.
4 quarters.
So 1 year, yeah.
So December 2026, basically.
Okay. So the next 12-month target is that. Okay. Got it. All right. Any sector tilt to that?
So it depends, because markets will keep on changing the texture. Right now, you have.
I'm just trying my luck.
Difficult to predict right now.
Okay, so no sector tilt there in terms of a trend. But Sun Pharma, they've told the High Court that they will export semaglutide only to countries where Novo Nordisk has no patent rights and won't sell the drug in India until Novo's patent expires in January. The assurance comes after Novo sought to block Sun's sales. Charu joins in with the latest on this one.
The dispute over semaglutide, an element that forms a major component of weight loss drugs like Ozempic, has become talk of Pharma Town. Novo Nordisk, a Western company, has come forward before the Delhi High Court yet again, this time against Sun Pharmaceuticals. Before this, another dispute with Novo Nordisk and Dr. Reddy's Laboratories is already going on before the Delhi High Court. So what has essentially happened here is that Novo Nordisk has started a petition that was mentioned in the Delhi High Court yesterday, and a hearing took place today in which Sun Pharmaceuticals has mentioned that it is not going to sell or export its products in the Indian domestic markets until the patent of Novo Nordisk is applicable in India. As per the information that is available with us, that patent is going to expire in the month of January 2026. Apart from this, we must understand the dispute regarding semaglutide is also something that has been going on between Novo Nordisk and Dr. Reddy's Laboratories, where the court had also allowed the Indian company to export in countries where Novo Nordisk does not have a patent, and had also said that it is until the patent of Novo Nordisk company is applicable in India. The dispute about the element is still going on before the Delhi High Court for both the companies, and we'll keep the developments rolling.
Okay, so that's the latest coming in from Sun Pharma, that clarification on its semaglutide sale as well as exports. Anand, weigh in here and help us with your view on some of the pharma stocks. CDMO used to be or continues to be a darling theme within the pack, but this entire weight loss semaglutide theme is also picking up steam. What are some sub-pockets that you're liking in pharma right now?
Well, obviously, things like weight loss will be a big theme, will continue for many years to come. It is wellness is something that people will be focusing on, and I would imagine that this will actually move to an OTC kind of status maybe sometime in the future. But there is no question that that remains a large theme. But if you were to look at it from a point of view of where the business as a whole can go, I think CDMO is a more sustainable one, because it's not simply one drug or one type of drug, but it is the entire gamut of production. And that's probably one of the few areas where India is needed for the rest of the world. It is, there are very, very few things that India can contribute to the world. CDMO capacity is one of them. Pharmaceuticals in general, chemicals in general is another. So consequently, that's at least in terms of top line, you can be sure that you will typically not have too many accidents. The rest of it is a matter of strategy at any point of time as to which particular company or focus to look at. But short answer, CDMO remains a favored space.
Shifting focus to hospitality, do you like any players in that space? We've seen a decent run up over the last couple of years, especially in some of these names. Thereafter, they've been moving either sideways or lower. Opportunity, you reckon, in any of these?
This is a very cyclical space. Typically, players always end up saying that they are underpriced and their rooms should go up at a higher rate. All they need to do is look at this. If you were to look at the retail market or the non-business market, you will find that India is probably one of the most expensive places to travel. So from that perspective, the business consumer is what will drive the business. And to the extent that the business is showing some signs of weakness, I would argue that until and unless we see a substantial pickup in earnings growth of companies and a much more robust economic activity, notwithstanding the GDP numbers, you will find that the companies will struggle to continue to give you significant returns from where we
are. Kunal, any of those hospitality counters on your radar as well? Do you like any of the names within the hotel space?
Nothing really pops up on the charts. So okay. I think most of the names, Indian Hotels, Lemon Tree, Chalet, etc., they are continuing to show signs of a downward trend or a sluggish trend for themselves. Rallies into these stocks have been sold into, so that's a bigger concern, because you'd want to have a substantial point where the stocks sustain those rallies build up the trends for themselves, even if it's in a gradual manner. But if these stocks go into a phase of a rally and then the rally gets sold into very easily, the trend becomes a lot more questionable, which is the case for many of these hospitality stocks.
Okay, so that's on hospitality. Kunal, surprising, nothing looks good over there right now on the charts because it is a space that has been seeing some movement given that we're heading into the holiday season now with Christmas, New Year coming up. You also have festive season and wedding season at play. So all of that looks good. But shifting focus, Kunal, let's talk about real estate. Another sector that has done absolutely nothing. And in fact, on a year-to-date basis, as we're drawing to an end to this year, 17.5% cut on Nifty Realty. Some of the biggest underperformers, Kunal, Anantraj is 40.5% lower this year. Are you seeing any buying opportunity for something like an Anantraj given its strong presence in the data center segment?
So ideally, we say that a 50% correction from the highs, because you have to look at Anantraj not in the context of the YTD correction, but over the last 5-6 years, from 2020 odd, when the stock was double digits towards a point when the stock moved to almost 945, 950 levels in 2024. So I think in that context, the stock had done almost 10x in the last 5 odd years. And it's now just about going through a mean reversion. It's happened to so many of the stocks across the last 20-25 years when stocks have gone into a 5x, 10x kind of a rally in a very short span of time. By short span in this case, I mean a period of 4 to 5 years. These stocks have gone through a grind for at least a couple of years before these stocks made a comeback. And in ideal scenario, a 50% correction from the previous major highs for these kind of stocks becomes a good floor for such stock prices. Case in point, Anantraj I think went down as much as 400. If I'm not wrong, in the March-April correction 2025, and from 400 thereabouts, the stock jumped back towards 700, 740 mark. So I think a similar test towards the 400 levels for Anantraj actually could be a good point where traders may look at a contra buy for the stock, because that's where I would believe that the first leg of a major demand or a support could originate for the stock.
Okay, all right, let's try and get a sense. Anand Tandon, give us a sense as to whether the chemical sector, in your opinion, is poised for a turnaround, or give us one sector space which you believe could be poised for a turnaround, which the market is not seeing and which you believe could be a good story to play over the next 6 to 12 months.
So the market is all seeing, right? And they even see things which are not there. So that said, the valuations aside, I think the specialty chemical sector is certainly a decent place. Many of the companies have gone through significant capacity addition, which over a period of time will play in through the earnings. The challenge, however, is that most of them are priced to perfection and then some. And therefore, the question is, if there is a valuation reset in the market for whatever reason, you may find that the companies are able to grow, and despite that, they do not give you any great returns as a shareholder. But if there is no valuation reset and we continue to remain at a high, elevated valuation, then you should at least get an earnings growth from these companies, which is likely to be quite good in the years ahead.
Okay, Anand, appreciate that view and appreciate you joining us today. On that note, we'll let you go as we have about 2.5 minutes left for us to wind down for the day. So let's start wrapping down, and Nifty at the day's lowest point, 0.3% cut on the Nifty, 25,750 thereabouts is where we are struggling to hold on to. Sensex 2 or 0.3% cut. India VIX absolutely flat with Nifty Bank down about 1%. The advanced decline ratio has slightly more skewed towards the decline, so that is not looking good for the markets. Eicher Motors, on the other hand, from the Nifty 50 group of stocks, continues to gain up about 2%. Hindalco, HDFC Life, Tata Steel, Coal India, they're all doing well. On the flip side, the pressure continues to persist for Interglobe Aviation, about 3.5% lower. Eternal is 3% lower. Trent about 2% lower. Adani Enterprises, Bharti Airtel, Apollo Hospitals. These are your top Nifty 50 losers. Taking a look at the sectoral gainers and losers today, more sectors towards the losing end, but from the few that are on the gaining side, metals have done well today. 0.4% uptick led by the move in Hindustan Zinc. 4.25% uptick over there. Lloyds, Jindal Steel, Vedanta, Hindalco, Tata Steel have all done very well. This followed by Nifty Pharma, where select stocks have been doing okay. But you have FMCG, auto on the flat line. 0.2% cut on energy, followed by steeper cuts in banks, Nifty Finance Services, Realty, PSU banks and IT. So it's actually the entire banking and financial space, including select NBFCs, that are not doing all that well. from IT, you have deep cuts on Persistent Systems, Coforge, OFSS, Mphasis and Infosys. So largely the mid-cap end of the IT basket not holding on all that well. From the broader end of the market, HDFC Life is doing well, as is the case with Sun Pharma, ITC, NTPC. And on the flip side, you have some pressure on Trent once again, a 2% cut over there. Adani Enterprises, Bharti Airtel, Apollo Hospitals, Ultratech Cement, Geo Financial, Bajaj Finance. These are some of the stocks that are on the losing end of the market. So that is how we're coming close to wrapping up for the day. Select stocks from the pharma space that are doing well. Ajanta Pharma is up 1.5%, JB Chemical, Sun Pharma, all of these stocks continue to do well. So at least that is something that the market is holding on to, although those gains are rather tepid. But if you take a look at some of the stocks that were in focus today, GPT Infra on the back of an order win worth 190 crores, that stock saw double-digit gains. Anupam Rasayan, AU Small Finance, Tube Investment, TVS Supply Chain, Samman Capital, IRB Infra, and that list goes on and on. These are some of the top gainers today. But with that, we'll take the closing comment from Kunal. Kunal, we seem to have closed below 25,750 and the expiry at play. And remember, like we were talking about a few minutes ago, every Tuesday when we see a cut, at least for the last 2 weeks, we've seen the Thursday expiry play out better. Is that something we can expect tomorrow?
Let's hope it happens. Because I think, so again, tomorrow being a important day, because today the markets will react based on the policy event. And, the global market reaction is something which is very, very important and noteworthy, because, our markets have not reacted or maybe sustained the reaction post the RBI policy. We had a good Friday for our markets, but then frankly post that we've not seen any major follow through for the indices. So which means something across the globe has to happen for our market to show signs of strength and at least try and have that durability of a comeback for itself. But as of now, it doesn't look like that the markets are in any shape of coming back into any kind of a comebacks unless the data points across the globe starts to improve significantly.
Okay, and with that, viewers, it's out of time on this edition of Closing Trades. Kunal, thank you so much for joining us and giving us those views. And viewers, thank you so much for joining us from Snehi, myself, and everyone who puts this show together. That's a goodbye from all of us.